The Market Sniper, and we're looking at precious metals. Haven't done something in a while here. It's not been the most exciting of places. Let's start with the silver. Silver has a little bit of a squeeze happening here. It's been slightly disappointing. We know that it had a good burst off lows not so long ago, beginning of the year 2016. We said it would be a good year for silver, and then again in 17 we felt that the market would do well. Actually, silver had a dip below its start of the year over here. This was not prevalent in gold. We'll do gold next. So this is your silver, gold, and we're going to take a wing by an industrial metal as well. So silver was a bit of a disappointment. Now, when silver underperforms gold, you'll see when we flick to the gold chart, this sell-off just didn't occur, and this was in and around July. That's usually a bad sign. In other words, you want the gold-silver ratio to be going down. In other words, it is costing more gold to get silver. In other words, less ounces of silver to buy an ounce of gold. When the ounces of silver are going up to buy an ounce of gold, that means silver is losing value relative to gold, and it's usually a precious metals bear or indifferent period. Bullishness usually sees greater upside on silver, which will mean the ratio will go down. So that'll come more apparent now in case that's confusing you. So let's just show gold. See this relative July low, that was well supported. It was higher than how we came into 2017. So for precious metals, the call on gold to be upside has been pretty good. That said, it's not been a runaway success either. It broke roughly at the 1250 zone. So I've done some charts which I'll be sharing with our premium guys, but I'm going free view on this opinion. We made our second interim here. We pulled back. We supported on the funnel. There is still a target and plenty of time at $1,500 slightly through, in fact, for that to occur. So yes, gold is still technically in a bull, and this was part of a recovery from near all-time lows. At this juncture, you're at 1,045, and it falls into the category of a first setup in a new trend, which could be very strong. More on that to come, because you get overperformance out of those situations. So that's the gold. You can see if I flick back to the silver watch over this period, there was a fall away in the silver market here. So the gold line was going up like this, and at the same time silver was falling to a new low. Note, however, that silver has got a little bit of interesting squeeze structure here. We teach you how to trade the squeeze, and you can spot various aspects with this. So there's a little bit of a winding up structure. It's not perfect for a number of reasons. We'll talk about low slung, high slung, grind lines, proportionality, etc., and you'll learn more about that if you pop to the Market Sniper and you get involved there. But anyway, before I get too deeply into that, let's just also have a little look one more time at this. So if you drop a time frame, you'll see there was a grind line. You can learn also about what grind lines are. If I just drop down to an hourly, in fact, let's go 4 hours. That's a bit too acute. You can see that we had a grind line. Grind lines are typically broken with a little bit of a dip through. So there's a possibility of this to come off again, but it has been quietly accumulated, but bumping up against a bit of a ceiling in and around the 1725 mark recently. So with silver running into a bit of a ceiling at the 725, getting a bit puffed out, grinding up, it's having a little bit of short. So we need to let this work its way through, but there could at some point in the not too distant future be a little bit of a possibility of eventually a break of this level after we've pulled down a little bit here. So it might be shining up a little for silver on this structure, but it has underperformed. So let's have a look at that underperformance. There was the gold that I was referring to. Here is the critical gold to silver ratio. You can see when we had our bull run in gold silver and the highs were hit, the gold silver ratio fell right down to 30. That was when silver was $49, and at that same time gold was $1,900 and I think $27. So that ratio was an all-time low. This was all part and parcel of post the depression and the subsequent QE policies being announced, and that saw the peaks of gold and silver prices being hit, and that, as you can see, is an inverse relationship with the ratio. Since then, the metals were weak, and it was grinding weaker and weaker, and we got quite excited when that grind line broke, because we said that could be a beginning of a new realm for the gold-silver ratio, and during that period, that was our pump in gold and silver off those lows in 2016. But what subsequently happened is we sat on a ledge here after coming back up and then popped forward on that ledge. So once again, we're coming into a particular area that's not particularly supportive. In other words, a high ratio is not good. I've done a little bit of a draw here for you, and generally when you get into this high air zone of around the 68 to through to the 80s and approaching 90s, we have sell-offs. This was an all-time high in the gold-silver ratio. You subsequently sold off, you grinded a little bit more trying to get higher again, and you got spanked. We reached a high there, we sold off. We're getting very close to the zone along again. So this is high area, bit of a descending triangle there for those of you that know a little bit about technical analysis coming up. So that points to possibilities for, once again, there's a bit of a retreat possible in the ratio between the gold and silver ratio. That is generally good for precious metals. So that's, you know, it's not runaway. This is not mega moonshoot stories, but potential here for a little bit of reprieve here because of this ratio. So while you're looking into that, let's flick back one more time. There's your gold. We're looking at a bit of a floor coming in, slight bit of resumption. Also important to note, an outlier volume day that occurred, which was a green day at this juncture on the support of that funnel. So we had quite a few big volume points just as we were breaking over here, and that was an outlier volume day, and that often begets future price action, and it traded up on that day. So the resistance there, a little bit of follow through, but nothing too gee whiz just yet. So that's your gold and that's your silver. As an example of something that we'd called on YouTube around the October-November period, we were watching copper. And we said we liked this setup, and initially we thought, could it go down? We then flipped to it being long and a breakout, and we took a lovely 30% move up here. And being the first setup in a new trend, you tend to get overperformance. So after our target was nicely overshot and run, you got a bit of a stall and a lot of churn. So this is quite a long period. This is a weekly chart, so I'm showing you quite an extensive period. Each candle represents an entire week. So you churned for quite a sustained period. You can see there that you were in November. Is that right? The 11th of July, I think it is. My apologies. 11th of July. It's this American dating that confuses me. The American in 2016, and then you churn. And since then, we're now in 17. Since then, you can see that we've since taken off and resumed bullish behavior. So this is the overperformance you get after a first setup in a new trend. So that's quite powerful, and has been really good for an industrial metal, which has, particularly to the Chinese as well, who store it as a form of a low-cost bullion, a bit of store of value aspect to that particular culture, and that's encouraging in terms of the gold and silver, because these fall into the category of, in terms of the gold, a first setup in a new trend. The silver setup was broken when it fell through and made a lower low. In other words, it was failing relative to gold. So that structure of it did fail here when we made this lower low. So gold has the first setup in a new trend. Silver hasn't. However, silver can catch up. Doesn't have to have an HVF in it. If this ratio that we took a fly past does what we think it could do, and you get a slight, there could be a little bit of a pump one more time up, and then you could fizzle. So this looks like there's a bit of support. You're seeing hammers there, so it could go up again one more time. It doesn't mean it's going to fall right now, but it is getting into that red zone from the other chart. So that's Francis. That was your update on precious metals. Run past the market sniper if you want to find out more about how we do this. Get involved in a community that is watching the markets at all times, utilizing the HVF method. They're all trained to a high standard. We have WhatsApp groups in all the various markets that we're following. You could be part of our Basecamp community, where you would have seen that draw on copper as and when it was done in this forum over here, Basecamp, where you will see both the commodities, the precious metals, and the FXs are covered, along with our favorite topics such as the crypto. So that's themarketsniper.com. Find out more. We'll be doing an amazing program in January. We're upgrading our interface for all our existing premium clients, so there's a lot of awesome investment going on. Speak to you all soon, and enjoy. Trade small. Nothing is deemed as a recommendation. It's for information.